Okay. Do you see me fine? Do you see my do you see the Google Slides fine? Mariah? Yeah. Okay, as long as it all looks fine. It's almost 4, so I'm going to start here in a second. And let's see, I look fine on stream. I don't look too small. I mean, kind of small, but that's fine. Okay, it's 4 o'clock. Yes, I see them. Okay. Well, it's 4 o'clock, so I'm going to get started on this webinar. So, hi, welcome to the webinar on From Ideal to Launch, the guide to creating your own business. So, who am I? My name is Timothy Cortez. I'm thrilled to have you all here today, of course. Over the next hour, we'll dive into the exciting world of entrepreneurship and explore the steps involved in turning your ideals into a successful business. Now, as you see, I have a PowerPoint presentation, Google Slides presentation in front of me. This is just so for visual learners, because I myself am a visual learner, so I like to see information in front of me just to, just to verify it, to make sure I'm like accurate in my information. This is for other people to look at, and just so they can learn from it too. So I'm now the owner of Financial Family Values, LLC, creating a business from the ground up with knowledge I have gathered over the years. I first got into entrepreneurship in 5th or 6th grade. It's been a long time, but it was up there, where I did a presentation on it. And, nothing really happened after that. I just looked at the highest paid gross job, and it was entrepreneurship, so I did a presentation on it. A lot of time passed before I even considered pursuing the career as an actual business owner. So in this webinar, I'm going to pack you with tons of information. So maybe throughout the next hour, I'm going to be going through a lot of slides. Might be half hour to an hour, I'll say, just so you know how to expect to do with your time. Apologies for my poor speaking skills if I have some right now. I feel like I'm stuttering. So, what is an entrepreneur? Is it a job, a mindset, or is it a way of life? The definition of an entrepreneur is a person who organizes and operates a business or businesses, taking on greater than normal financial risk in order to do so. To me, they are a leader who takes on responsibilities and creates value for his community. Entrepreneurs are lifelong learners. They seek knowledge, stay updated on industry trends, and are always looking for ways to improve themselves and their businesses. This is necessary to stay afloat in an evolving business landscape, a thriving ecosystem. Here's a quote by Ralph Waldo Emerson. The purpose of life is not to be happy. It is to be useful, to be honorable, to be compassionate, to have it make some difference that you have lived and lived well. Let's see. What makes an entrepreneur? Ideal traits to have. So an entrepreneur, when some people think about creating a business, they think it's just an easy replacement for a job, but it's not. It's a lot of work to get it going, to keep it running. And like if you try to pay yourself too much money, your business is going to go under if you don't manage your money correctly. So you have to be really good at budgeting. So what makes an entrepreneur? These are ideal traits to have if you're going to become an entrepreneur. They're visionary thinkers. Successful entrepreneurs have a clear vision of what they want to achieve and the impact they want to make. They are able to think beyond the present and envision a future that is different and better. So part of my dream was to create a business called Financial Family Values. And I just had the idea of helping families out who are struggling. And so I created this business. I was passionate and driven when I did create it. They're passionate about their ideals and have a relentless drive to turn them into reality. They are willing to put in the necessary effort and persevere through challenges and setbacks. Networking and relationship building. Entrepreneurs understand the value of networking and building relationships. They actively seek opportunities to connect with mentors, partners, investors, and customers to leverage their knowledge and support. So if you're going to be an entrepreneur, you're going to need to network with people. You're going to create business relationships so that you can keep your business running, everything like that. Get investors to invest in you. Entrepreneurs need self-confidence because if you're going to be networking, you're going to need to be very confident with yourself or people are going to push you around in the business world. Successful entrepreneurs have confidence in their abilities and ideals. They believe in themselves and their vision, which enables them to overcome self-doubt and persevere in the face of challenges. They have a positive mindset. Successful entrepreneurs maintain a positive mindset even in the face of challenges. They see failures as learning opportunities, maintain optimism, and are solution-oriented rather than dwelling on problems. Speaking on problems, their problem-solving orientation. Entrepreneurs are natural problem solvers. They are adept at identifying problems or unmet needs in the market and finding innovative solutions to address them. And of course, adaptability. Entrepreneurs need to be adaptable and open to change. They are willing to pivot their strategies, modify their plans, and embrace new opportunities as the business landscape evolves. Resilience. Entrepreneurs face numerous obstacles and failures along their journey. However, they possess resilience and are able to bounce back from setbacks, learn from failures, and adapt their strategies accordingly. Now, if you're wondering where you can happen to gain all these traits, I know a man who told me all about how fitness and entrepreneurship have a lot of things in common. And of course, if you're going to get into fitness, you're going to need to build resilience, and you're going to need to build something called delayed gratification. And these things are things you develop in fitness, showing up every day, committing to the exercise, knowing that eventually you will see results. And that's the same thing as running a business. Risk-taking. Entrepreneurs are comfortable with taking calculated risk. I highlighted that, calculated risk. They understand that entrepreneurship inherently involves uncertainty and are willing to step out of their comfort zone to pursue opportunities. Of course, they're going to make sure to do market analysis, market research, and make sure that the business idea is sound, or at least looks like it will have some idea of working. So let's understand entrepreneurship. So let's understand what entrepreneurship is and why it's so important in today's business landscape. I'll explore the benefits and challenges of starting a business, but first, I'm going to draw inspiration from remarkable success stories of entrepreneurs who have achieved their dreams. If you're wondering what an entrepreneurship, well, if you're trying to start a business right now, congratulations, you're an entrepreneur. Welcome to the club. So all they are is just someone who wants to start a business. Elon Musk is a famous entrepreneur, the co-founder and CEO of companies like Tesla, SpaceX, and Neuralink. Elon Musk is known for his visionary ideals, and pursuit of technological advancements. He has disrupted multiple industries, from electric vehicles to space exploration, with the aim of creating a sustainable future. Yes, this is not an actual image of Elon Musk. This was AI generated. And just so you know, the man also had some hand in AI. I'm sure you've heard of AI by now. It's a rising industry and something that an entrepreneur should take advantage of at any chance they can. Okay, let's go with the next slide. Oprah Winfrey. As a media mogul, philanthropist, and talk show host, if you're wondering what a philanthropist is, it's just a really, well, not really wealthy. I say a wealthy person who does things for the greater good, like donate money, stuff like that. So she's a philanthropist and talk show host. Oprah Winfrey has built a vast media empire and used her platform to inspire and empower millions of people worldwide. Her journey from humble beginnings to becoming one of the most influential figures in the entertainment industry is a testament to her entrepreneurial spirit. Okay. Sarah Blakely. As the founder of Spanx, Sarah Blakely revolutionized the shapewear industry and became one of the youngest self-made female billionaires. Her innovative and solution-oriented approach to addressing common wardrobe challenges propelled her business to remarkable success. Of course, Jeff Bezos. Who doesn't know Jeff Bezos? Is the founder of Amazon, the world's largest online retailer. Through relentless focus on customer satisfaction and continuous innovation, he transformed the way people shop and built a global e-commerce empire. Bezos' entrepreneurial journey exemplifies the power of long-term vision and customer centricity. So, let's identify profitable business ideas. In this section, I'll dive into the process of identifying a profitable business idea. I'll discuss strategies. Yep. Let's start with a real-world example of businesses that took profitable business ideas and found success through them. Airbnb. So Airbnb was identifying a market. One inspiring example is the company Airbnb. They founded in 2008 by Brian Chesky, Joe Gebbia, and Nathan Blacharsky. Sorry if I butchered your name. Airbnb started as a solution to the challenge of finding affordable accommodations during a busy conference week in San Francisco. The founders identified a market gap where hotels were fully booked, and they realized that people had spare rooms or homes they could rent out. By leveraging this opportunity, Airbnb created an online platform that connected travelers with hosts offering unique accommodations. This innovative idea disrupted the traditional hospitality industry and allowed individuals to monetize their unused space while providing travelers with a more personalized and authentic experience. Through relentless dedication and continuous refinement, Airbnb expanded its services globally and became a trusted name in the travel industry. Today, it offers a wide range of accommodations, from shared rooms to entire homes, catering to diverse travel preferences. So what does Airbnb do? They think like a creator, not a consumer. The success of Airbnb demonstrates the power of identifying a market gap and creating a platform that meets the needs of both host and guest. It shows that a profitable business idea can emerge from recognizing an unmet demand and developing a unique solution. So in the upcoming sections, we'll explore further strategies and steps you can take to validate and refine your business idea, ensuring its viability and setting the stage for building a successful venture. This example introduces Airbnb as a real-world business that identified a market gap and capitalized on it, demonstrating the potential for profitable business ideas to arise from unrecognized, unmet needs. So I'm going to give you one more example. Warby Parker. So this is a remarkable example of thinking like a producer or a creator is the story of Warby Parker. Warby Parker is an eyewear company that disrupted the traditional eyewear industry by offering stylish, affordable, and direct-to-consumer glasses. The founders of Warby Parker noticed two key market gaps: the high cost of eyewear from established brands and the limited options available to consumers. By thinking like producers, they set out to address these gaps by designing their own frames, manufacturing them, and selling them directly to customers online. Warby Parker's approach challenged the conventional retail model dominated by high-priced designer brands and the limitations of physical eyewear stores. By cutting out the middleman and embracing the online direct-to-consumer model, they were able to offer high-quality eyewear at a fraction of the cost. Okay. So, how to capitalize on my business idea. You want to do some market research. It's a crucial step in validating your business idea. We'll explore various market research methods and tools that can help you gain insights into your target customers and competitors. By conducting effective market research, you'll be better equipped to make informed decisions and tailor your products or services to meet customer needs. So here's a bunch of market research examples. Surveys and questionnaires. Surveys are a common and effective method for collecting data from a large number of people. They can be conducted online, through email, in person. Surveys allow you to gather quantitative data and insights on customer preferences. So if you're under a quantitative data, it's quantity over quality. Like you're gathering more quantity data over the quality. I don't know, it's a weird word, but that's what it means. You're just basically gathering a lot of data. And insights on customer preferences, buying behaviors, demographics, and more. Tools like Google Forms, SurveyMonkey, or Typeform can help you create and distribute surveys easily. Focus groups. Focus groups involve gathering a small group of individuals who fit your target audience profile and conduct a guided discussion. This method allows for in-depth qualitative insights, unlike quantitative, qualitative. So you're looking for quality here, as participants can share their opinions, perceptions, and experiences. Focus groups can provide valuable feedback on product ideas, marketing messages, and customer preferences. They are usually facilitated by a moderator and recorded for analysis. Interviews are the opposite. There are one-on-one conversations with individuals who represent your target audience. They can be conducted in person, over the phone, or through video calls. They allow for a deeper exploration of customer needs, motivations, and pain points. Conducting interviews provides qualitative data and helps you gain a more comprehensive understanding of your target market. Observational research. This method involves observing and documenting consumer behavior in real-world settings. By observing how your customers interact with products or services, you can gain insights into their preferences, usage patterns, and pain points. Observational research can be conducted in physical stores, online platforms, or other relevant environments to understand customer behavior in its natural context. Social media listening. This is a really common one I see online all the time. Social media platforms offer a wealth of information about consumer opinions, trends, and preferences. By monitoring and analyzing conversations, comments, and reviews related to your industry or product, you can gather valuable insights. Social media listening tools like Hootsuite, Brandwatch, or Sprout Social can help you track mentions, sentiment, and engagement around specific keywords or topic. So say if you want to know what people are saying about like underwear, like Spanx, you can look up specifically that word and you can see what people are saying, and then you can market off of that. Online analytics. I use this for, say, my website. Analyzing website traffic, user behavior, and conversion metrics like Google Analytics provides valuable quantitative data. It helps you understand how customers are interacting with your website, which pages are most popular, and where visitors may be dropping off. Online analytics can uncover patterns, identify customer preferences, and inform your marketing and product strategies. One example of this is when I was looking at my website's online analytics, I noticed that my budgeting page was getting a lot of views. So I created a more detailed budgeting guide and posted the article, and it got a lot of views because a lot of people were interested in it at the time. So that's one way you can capitalize on it, is look at which page is the most valuable and create more content based around that. Competitive analysis. Researching and analyzing your competitors' strategies, products, pricing, and marketing efforts can provide valuable insights. This analysis helps you understand your position in the market, identify gaps, and differentiate your offerings. By studying the successful competitors, you can learn from their approaches and adapt them to your business. For a book that talks about stuff like Still Like an Artist is a good book I'd recommend for stuff like this. It really gets you into the mindset of building off of the information that you see and taking the best of it and putting it together to create new things. Let's see. So, developing a business plan. Every battle is won before it's ever fought. Sun Tzu, Art of War. So, if you're going to create a business, you want to plan everything before you create that business. You want to basically ensure this plan is going to work, because you're going to be putting a lot of money into this business starting out. So you want to have a solid business plan. It's vital for guiding your entrepreneurial journey. Let's break down the key components of a business plan and discuss how to create a compelling value proposition. A value proposition is important. We'll go over that in a little bit. Also touch upon financial projections and resource planning. Let's see. A business plan outlines your business concept, objectives, strategies, target market, competitive analysis, and financial projections. It serves as a roadmap that outlines your business's directions and helps you make informed decisions. Your business plan should include an executive summary, company description, market analysis, organizational structure, product or service description, marketing and sales strategy, and a financial projections. Sounds like a lot, but I have definitions for all of it right here. So, business plan component definitions. What is an executive summary? An executive summary is just a concise overview of your entire business plan. It provides a snapshot of your business's, highlighting its key aspects, objectives, strategies, and financial projections. The executive summary is typically the first section of a business plan and serves as a quick introduction to attract the reader's attention and provides a high-level understanding of your business. The company description provides detailed information about your business, its mission, vision, values, and legal structure. It outlines the history of your company, its founders, and key personnel. The company description also includes details about your products or services, target market, competitive advantage, and any unique selling propositions that set your business apart. Market analysis involves researching and analyzing the target market industry in which your business operates. It includes assessing market trends, customer demographics, competitors, and potential opportunities and challenges. Market analysis helps you understand your customers' needs, preferences, and purchasing behavior, enabling you to tailor your products or services to meet their demands effectively. Now, they're going to have a market analysis section. You might want to have it on your business plan, but this is something that you don't want to rely on. You want to use all the strategies available that you possibly can when you're going into market analysis. You can list a few, but just use any single one you can. Organizational structure. Organizational structure refers to how your business is organized and how roles, responsibilities, and reporting relationships are defined within the company. It includes the hierarchy of positions, departments, and teams. The organizational structure section of your business plan outlines the key personnel and their roles, as well as the overall structure of your management team and operational framework. Product or service description. The product or service description provides detailed information about what your business offers. A comprehensive explanation of your products or services, their features, benefits, and unique selling points. This highlights how your offerings meet customer needs and solves their problems. It may also cover details such as pricing, production process, intellectual property, and any relevant patents or trademarks. Marketing and sales strategies, that was also when I was talking about market analysis, but this section outlines how you plan to promote and sell your products or services. It includes your target market, marketing channels, pricing strategy, distribution methods, and customer acquisition tactics. This section also covers your competitive position, branding, advertising, and sales approach. It demonstrates how you plan to attract customers, generate leads, and convert them into paying customers. I'm going to go into more details about marketing and sales strategies here in a little bit too. And of course, the last thing, financial projections. Is your business sustainable? Always make sure you can verify that if you're going to be buying a lot of things at the start, that you're going to have at least a detailed projection of how your business is going to operate through the next couple months. I would recommend getting a CPA or a business consultant. Talk to one of them. I have a note about that here in a little bit. Financial projections are essential for demonstrating the viability and profitability of your business. They include projected revenue, expenses, cash flow, and profitability over a specific period. Financial projections help you assess the financial feasibility of your business idea, plans for resource allocation, and attract potential investors or lenders. It's important to conduct thorough market research, consider industry trends, and make realistic assumptions when creating your financial projections. All companies require an initial investment from the owners or stockholders, usually called owner's equity or stockholders' equity, and they typically incur higher expenses before generating revenue. Once revenue starts flowing in, it is deducted from the expenses, and what remains is the profit. So revenue is what your business brings, and then you divide that between all your expenses and what you have left over. And profit, that's what feeds the family and probably pays you off. And you want to keep some to the side for emergencies for your business. Now, these definitions provide a foundation for understanding the components of a business plan. As a new entrepreneur, it's essential to dive deeper into each component and tailor them to your specific business ideal and industry. Because I can't just tell you specifically what they are. It's all going to depend on what your business is. A value proposition. What sets you apart? Your value proposition is a concise statement that communicates the unique value your business offers to customers. It should highlight the benefits and advantages customers will receive from your product or service. To create a compelling value proposition, identify your target customers' pain points, understand their needs, and position your offerings as a solution. Your value proposition should clearly articulate what sets your business apart from competitors. You can also put your value proposition on your business brand, your logo, or product. It could just be like a simple one line if you really want to put it all together. But also a value proposition is what you're going to show to investors too. You also want to create a nice, concise statement to show investors. I'll go over that in a little bit. So, building a strong brand and online presence. Branding plays a significant role in shaping how customers perceive your business. Let's see. Building a strong brand identity, provide practical tips for creating a memorable brand. Additionally, I'll explore strategies for establishing an effective online presence through websites, social media, and other digital channels. So let's go over branding first. So first, you want a good brand identity. It encompasses the visual elements, messaging, and overall personality of your business. It's important to develop a brand identity that resonates with your target audience and sets you apart from competitors. This includes designing a compelling logo, choosing appropriate colors and fonts. You can look more into that through the psychological and all kinds of things, like blue being a trusting color, for example. That's just one example I'm going to give you. And creating consistent visual elements across all your marketing materials. Brand messaging. Your brand messaging is the language and tone you use to communicate with your audience. It should reflect your brand values, convey your unique selling proposition, and connect emotionally with your customers. Crafting a compelling brand message involves understanding your target market, their pain points, and how your product or service can provide solutions. So practical tips for brands. Build a business with the ideal to sell and it having no attachment to your face or personal brand. Businesses need their own identities. Keep your personal and business brands separate. It is hard to expand a company named after the owner and keep a fan base when you have been the face of the brand and then you leave. Because when you leave, those fans will probably leave with it. And now your your company's brand is going to have less customers as a result. So if you build a company, don't name it after yourself, maybe. Like I have created my company, financialfamilyvalues.com, not timothycortez.com. Because maybe one day I want to sell the business, or I want to add more workers and become a boss, not an actual person for the business. So let's see, online presence. In today's digital age, establishing an effective online presence is essential for business success. So these are all strategies I'm going to tell you about establishing an online presence. So you want a professional website. I have financialfamilyvalues.com. Your website serves as a virtual storefront for your business. Create a professional and user-friendly website that reflects your brand's identity, provides valuable information to visitors. Ensure that your website is mobile responsive, loads quickly, and has clear navigation. Optimize it for search engines to improve visibility and organic traffic. You want social media engagement. I myself engage a lot on Twitter for a lot of followers who want to come check out my site. Leveraging social media platforms to connect with your audience, build brand awareness, and drive traffic to your website. Choose the platforms that align with your target audience and industry, and create engaging content that resonates with your followers. Regularly interact with your audience, respond to comments and messages, and encourage user-generated content to foster a sense of community. Content marketing. Create and share valuable content that is relevant to your target audience. So obviously, Financial Family Values. This webinar is all about how to create a business. This is what I'm doing right now. This can include blog posts, articles, videos, podcasts, infographics, and more. By consistently delivering high-quality content, you establish yourself as an authority in your industry and build trust with your audience. Optimize your content for search engines to attract organic traffic and share it across your social media channels to expand your reach. So another couple things you can do are email marketing. That's an old one. Build an email list of interested prospects and customers and regularly communicate with them through targeted email campaigns. Use email marketing to share updates, special offers, educational content, and personalized messages. Segment your email list based on customer preferences and behavior to deliver more relevant content and improve engagement. So I use Mail Poet. What's the other one? Monkey. I forgot the monkey one. Oh, well, I'll have to look it up. But here's a good one. Mail Poet. That's one for email marketing. Online advertising. Consider utilizing online advertising platforms like Google Ads, social media advertising, and display advertising to reach a wider audience and promote your products or services. Set clear objectives, target your ads effectively, and continuously monitor and optimize your campaigns for better results. And of course, online reputation management. Monitor and manage your online reputation because customers are always going to be talking about your business and leaving reviews, which is a good system because it keeps you on top of your business and helps you know what you need to fix to keep your customers happy. By actively listening to customer feedback and promptly addressing any concerns or negative reviews, encouraging satisfied customers to leave positive reviews and testimonials can greatly influence potential customers' perceptions of your business. So legal considerations in business setup. Starting a business involves several legal considerations. We'll highlight the key legal aspects you need to be aware of, such as business registration, licenses and permits. We'll also discuss different business structures and their implications, helping you make informed decisions when setting up your business. So right here, you're going to see the importance of smaller steps, because creating a business it's a step-by-step process. It can seem overwhelming at first, but if you sit there and you break it down into steps and do it one step at a time, it really is easy and manageable. So here are legal considerations. Of course, if you're going to create a business, you're going to register it. Usually, depending on your country and local regulations, it's different for anywhere you are. You're by town, county, state, country. It goes on. You just really want to look at business registration. When you want to register your business online, you want online or in person or legally brick and mortar, you want to look at all the regulations around where you're setting your business up. You may need to register your business with the appropriate government authorities. This process typically involves selecting a business name, completing the necessary paperwork, and paying any required registration fees. Registering your business establishes its legal existence and provides you with certain rights and protections. You may need a license and permit. Certain industries and business activities may require specific licenses and permits to operate legally. Research the requirements for your particular business type and ensure that you obtain any necessary licenses or permits before starting operations. Examples of licenses and permits may include a health permit, professional licenses for selling, or specialized industry certifications. Okay. Intellectual property protection. Of course, you want to safeguard your intellectual property, your IP. It's crucial to protect your unique ideas, inventions, and branding elements. Consider consulting with an intellectual property attorney to understand the options available to you, such as trademarks, copyrights, and patents. By securing your IP rights, you can prevent others from using or copying your creations, giving you a competitive advantage in the marketplace. Contracts and agreements. As a business owner, you will likely enter into various contracts and agreements with suppliers, clients, employees, and other stakeholders. It is essential to have well-drafted contracts that clearly outline the terms and conditions of the business relationship, including payment terms, deliverables, confidentiality clauses, and dispute resolution mechanisms. Consulting with a business attorney can help ensure that your contracts are legally sound and protect your interest. Compliance with regulations. Familiarize yourself with the legal and regulatory requirements that apply to your business. This may include tax obligations, employment laws, data privacy regulations, advertising standards, and industry-specific regulations. Staying compliant with these regulations is crucial to avoid legal issues and potential penalties. If you're wondering where you can find this information, a lot of it is available online. There's lots of resources out there for finding things about your local area. I might actually create a resource about my specific business area, but it really depends on where you are, because there's resources available for different areas. It's all about where you are. So employment laws. If you plan to hire employees, it is important to familiarize yourself with labor and employment laws in your area. Understand your obligations as an employer, including minimum wage requirements, overtime rules, employee benefits, and workplace safety regulations. Compliance with these laws ensures a fair and lawful working environment for your employees. Privacy and data protection. With the increasing reliance on technology and data collection, businesses need to be mindful of privacy and data protection laws. Understand how to handle customer data securely. Obtain proper consent for data collection, and comply with relevant data privacy regulations, such as the General Data Protection Regulation, GDPR, or the California Consumer Privacy Act, CCPA. What was the law? I think the California Consumer Privacy Act is where if someone subscribes to your site and you don't make it easy to unsubscribe, your business can get in trouble. But I might be wrong. Don't quote me on that. I'm just trying to remember if that's why I put it there. Guidelines for the proper way to pay yourself. So, legal considerations for paying yourself through your company. Like, say your company's earning a lot of profits. You're going to pay yourself. So paying yourself as a business owner is an important aspect of managing your finances and ensuring personal sustainability, of course. So how are you going to eat if you're always working on your business? Here are some guidelines for the proper way to pay yourself. You want to separate your personal and your business finances immediately. It's crucial to maintain a clear separation between your personal and your business finances. Establish separate bank accounts for your businesses and your personal expenses. This separation will help you track your business income and expenses accurately, making it easier to determine the appropriate amount to pay yourself. Determine a reasonable salary. As a business owner, you should pay yourself a reasonable salary based on industry standards and the financial performance of your business. Consider factors such as the hours you invest, your responsibilities, and the profitability of your company. Consulting with an accountant or financial advisor can provide valuable insights in determining an appropriate salary. So I remember someone told me about this. 50% of your profits is good, but if you go a lot higher than that, you're going to get a visit from the IRS wondering what's going on with your business. So you really should look into how much you should pay yourself. And also, you got to consider all the tax obligations your company has to take on. Like I'm in California, I have franchise tax, I have state tax, and then I have federal tax. And then eventually you got to have to do sales tax on all your income. I think sales tax, yeah. So yeah, there's a lot of things you got to consider when you're determining a reasonable salary before you even think about profiting yourself. So regularly review and adjust your salary. It's important to regularly review your business's financial performance and reassess your salary. As your business grows and becomes more profitable, you may be able to increase your salary. Conversely, during lean periods or when reinvesting profits into your business, you may need to adjust your salary accordingly. Keep in mind that maintaining a sustainable business should be a priority over maximizing personal income in the early stages. You're going to bleed a little bit at the start. Almost every business does. Consider other forms of compensation. In addition to a salary, explore other forms of compensation that can benefit you as a business owner. This could include bonuses, profit sharing, dividends. If you have a corporate structure or you're investing in personal development and professional growth opportunities, remember that the overall financial health of your business should guide these decisions. So follow legal and tax requirements. Ensure that you comply with legal and tax obligations when paying yourself as a business owner. Consult with an accountant or tax professional to understand the specific regulations and requirements in your jurisdiction. Properly document your salary payments and withholding. Appropriate taxes will help you avoid any legal or financial issues in the future. By properly documenting your salary, I mean like you're going to take your business, you're going to write a check to yourself personally, and then you're going to cash it into your personal bank account. So that way you have the receipt that this happened. So write a check from your business to yourself if you're ever going to pay yourself. So let's go over different business structures. Choosing the right business structure has legal implications and impacts various aspects of your business, including taxation, liability, and ownership. Common business structures include a sole proprietorship, a partnership, limited liability company, an LLC, and a corporation. Each structure has its own legal requirements and considerations. Research and seek guidance from a business attorney or accountant to determine the most suitable structure for your business. So let's go over a sole proprietorship. It's the simplest and most common form of business structure. It is owned and operated by a single individual. The key features of a sole proprietorship include easy and inexpensive to set up. No formal legal processes or registrations are required. The moment you make any money outside of your wages and it's going to you, you're an entrepreneur. You're now a sole proprietor. So you don't really need to do any paperwork. The moment you start making money outside your wages, you're considered a sole proprietor. Full control. The owner has complete control and decision-making authority, but they are personally liable for all debts and obligations of the business. I'll go over that in a second. And also tax considerations. Profits and losses are reported on the owner's personal tax return. The advantages: easy to set up, full control, minimal regulatory requirements. Disadvantages: unlimited personal liability, limited access to financing options. Most people don't invest in like sole proprietors because, not a lot of safety behind it. And potential challenges in scaling the business. Yeah, there will be challenges, but it's doable. So let's pretend this is you. And this is like your house, your car, boom, boom. And then this is your business. So this is a sole proprietorship. Okay, so if your business was ever to sue or go under and you had a bunch of debt and you were a sole proprietor, all your personal assets are also now at risk and can be taken away. So that's what a sole proprietorship is. That's what you should know about it mostly. Now, a partnership is almost the same thing, except it's run by two people, usually together. It can have tax advantages actually too. Let me go over that right now. A partnership is formed with two or more individuals collaborate to run a business together. There are two main types of partnerships. There's a general partnership. All partners are equally responsible for the business's liabilities and share profits and losses according to the partnership agreement. Then there's the limited partnership, where both general partners who have management control and personal liability, and limited partners who contribute capital but have limited involvement in management and liability. They share responsibility and resources. I make sure I put that in a way that you can understand. I think it's understandable. So it has both general partners who have management control and personal liability, and limited partners who contribute capital but have limited involvement in management and liability. So if I were to give an example, say they both have a house. You'll both have your own house in a limited partnership. You both have a car. Say your business goes under. You would equally both have like your assets taken away, depending on the general partnership agreement. So say if you both had a car, the car would go under. If that covered the full debt, then you guys wouldn't lose your house because you guys paid it off with the loan on both of your cars. But if the loan is huge, and both your houses could possibly go under as well. Now, a limited liability corporation, that's next. An LLC combines the limited liability protection of a corporation with the flexibility and simplicity of a partnership. Some key features of an LLC include limited liability. Owners, known as members, are typically not personally liable for the company's debts and obligations. So to simplify it, if you're an LLC, which is what I am, I'm an owner. This is my house, my car. Boom. Say like I'm managing my business. My business is getting big, but then someday my business goes under, right? All the assets in my business are going to go with it because all the company's gone bankrupt. But there's a wall right now because of the limited liability saying that none of my personal assets can be touched. So this is what separates an LLC from the other two. This is a really good thing to have. This is why I started an LLC personally. Then there's a corporation. A corporation is a separate legal entity from its owners, shareholders, and is managed by a board of directors. Key characteristics of a corporation includes limited liability. Shareholders' personal assets are generally protected from business liabilities. They have centralized management. Directors and officers are responsible for the day-to-day operations and decision-making. And ownership through shares. Ownership is divided into shares of stock, allowing for investment and transferability. So the advantages are limited liability for shareholders, of course, easier access to your capital, and of course potential tax benefits. The disadvantages are complex formations and ongoing compliance requirements and double taxation on corporate profits. Double taxation is a thing. It's really bad. Well, not really bad. I mean, if you know about tax exemptions and depreciation, I'll have to go into that. It's a more complicated process here later on. See, understanding different business models. When starting a business, it's essential to consider the type of business you want to establish. The nature of your business will impact various aspects, including operations, target market, revenue generation, and legal requirements. Here are some common business model types to consider. So, of course, product-based businesses. Product-based businesses focuses on the creation, manufacturing, and sales of physical goods. These businesses typically involve designing, producing, and distributing products to customers. Examples include retail stores, e-commerce businesses, consumer goods, manufacturers, and wholesalers. Product-based businesses require careful inventory management, supply chain coordination, and a solid understanding of the target market's preferences and demands. Service-based businesses revolve around providing intangible services to customers. These businesses offer expertise, skills, and knowledge to meet specific customer needs. Service-based businesses can range from professional services such as consulting, legal, or accounting services to personal services such as beauty salons, fitness studios, or event planning. Service-based businesses prioritize delivering exceptional customer experiences and building long-term client relationships. Manufacturing businesses are involved in the production of the goods by converting raw materials or components into finished products. These businesses often have facilities and equipment for the manufacturing process. Manufacturing businesses can be specialized in specific industries such as automotive, electronics, or food processing. Managing the production line, Optimizing efficiency and maintaining quality control are critical aspects of running a manufacturing business. Franchise businesses. Franchise businesses operate under an established brand and business model. Franchisees pay fees and royalties to the franchisor in exchange for the right to operate a business using their brand and systems. Franchise businesses benefit from the established brand recognition and support from the franchisor, including training, marketing, and ongoing operation assistance. Examples of franchise businesses including fast food chains, retail outlets, and service providers. That's like selling your business model and renting it out for other people to use. It's a really good thing people can do. Renting out business models. Online or e-commerce businesses. So online or e-commerce businesses operate primarily through digital platforms. My business is an online business, financialfamilyvalues.com. Right now it's mostly like information and media, but I'm going to expand it here soon. They sell products or services online. These businesses can range from small online boutiques to large-scale e-commerce platforms like Amazon. Online businesses leverage the internet to reach a wider audience, and they require a strong online presence, effective marketing strategies, secure payment processing, and efficient logistics for shipping products to customers. And of course, home-based businesses. Home-based businesses are operated from the entrepreneur's home. These businesses are often smaller in scale and have lower overhead costs compared to a traditional brick-and-mortar establishment. Home-based businesses can cover a wide range of industries and services, such as freelance writing, tutoring, graphic design, or online coaching. They offer flexibility and convenience for entrepreneurs who want to run their business while maintaining a work-life balance. That's from what most people use them for. So, those are business models. And of course, every business is going to need a financial system. And I had a vote for it, and people really wanted me to talk about the financial system. It was like a half-half almost. So here's a whole system on financial systems. A solid financial system is a crucial component of any business. Regardless of its legal structure, it helps you effectively manage your finances, maintain accurate records, and comply with legal and regulatory requirements. Here are some key reasons why a robust financial system is essential with your chosen legal structure. Note, this is not an effort you should take on yourself unless you feel absolutely qualified for it. It is advised to get assistance from a certified public accountant, a CPA, and a business consultant on this system. Skills in bookkeeping or a bookkeeper will be needed to run it effectively if you really want to run it yourself. And then, of course, if you're going to have the accounting side done, you can either learn how to account, learn how to make business financial. What am I looking for? What am I looking for? Financial paperwork. I'm going to say paperwork for now. What accountants do. So key components of a financial system are financial tracking and reporting. A well-established financial system allows you to track your income, your expenses, your assets, and your liabilities. It enables you to generate financial reports such as balance sheets, income statements, and cash flow statements. That's what I was looking for. Report. Wow. How did I mess up not remembering the word report? These reports provide valuable insights into the financial health of your business and help you make informed decisions. Of course, compliance with tax obligations. Proper financial management ensures that you meet your tax obligations in a timely and accurate manner. It helps you keep track of tax payments, deductions, and credits. Ensures compliance with the tax laws and regulations. A reliable financial system simplifies the process of preparing and filing tax returns, minimizing the risk of penalties or legal issues. Let me turn the volume down on my phone. Off. Sorry about that. Budgeting and forecasting. A financial system allows you to develop budgets and forecast, helping you plan for future expenses, investments, and growth. It enables you to set financial goals, monitor progress, and make adjustments when necessary. Budgeting and forecast provides a roadmap for your business, facilitating informed decision-making and resource allocation. Part 2. Financial analysis and decision-making. With a robust financial system in place, you can analyze all your financial data, identify trends, and evaluate the performance of your business. Literally, this is what you would use to look at financial projections and plan where to go next with your business. Let's see. It enables you to make data-driven decisions, assess the viability of new projects or investments, and identify new areas for improvement, or areas in general. Financial analysis helps you understand the financial implications of different strategies and take appropriate actions to achieve your business goals. Also, it increases the confidence with investors and creditors. A well-organized financial system, when showed, enhances the credibility of your business in the eyes of investors and creditors. It demonstrates your commitment to financial transparency, accuracy, and accountability. When seeking funding or partnerships, having a reliable financial system instills confidence in potential investors and lenders, increasing the likelihood of securing financial support. So that's a reason that I'm building publicly, which means I'm building my business out in the open, documenting it, showing the whole process. So people know that I'm creating a reliable, trustworthy business. And also investors and creditors can look at it and make decisions on them by themselves. So we're going to go past legal considerations into business banking accounts. Now, effective management of money is a fundamental aspect of running a successful business. One crucial element of financial management is selecting the right banking methods for your business. Here's why business banking methods are essential for organizing money. For one, separation of business and personal finances. Opening a dedicated business bank account allows you to separate your personal finances from your business finances. This clear distinction is crucial for financial organization and ensures that your business transactions, income, and expenses are separated from your personal funds. It simplifies accounting and bookkeeping, making it easier to track business-related transactions and calculate accurate financial statements. Improved financial tracking and reporting. Utilizing business banking methods such as business checking accounts, credit cards, provides a centralized location to track and manage your business finances. With online banking tools and statements, you can easily monitor cash flow, review transaction history, and generate reports. This streamlines financial tracking and reporting processes, enabling you to have a comprehensive view of your business's financial health. Enhanced cash flow management. Business banking methods offer features that facilitate efficient cash flow management. For instance, you can set up automatic payments for recurring expenses and schedule transfers to saving or investments accounts. These capabilities help you maintain control over your cash flow, ensuring that bills are paid on time, funds are allocated appropriately, and by having a clear understanding of your cash flow, you can make informed decisions about budgeting, saving, and investments. Let's see. Access to business financing. Establishing a relationship with your bank opens up opportunities for accessing financing options. Banks often provide business loans, lines of credit, and other financing projects designed to support business growth. Having a relationship with your bank and demonstrating a history of responsible financial management can enhance your credibility and increase your chances of obtaining financing when needed. And also, secure and convenient transactions. Business banking methods offer a secure and convenient way to conduct financial transactions. Online banking platforms provide a safe environment to transfer funds, make payments, and manage cash flow electronically. Electronic payment options such as business credit cards or debit cards or online payment systems facilitate seamless transactions with suppliers, vendors, and customers. This efficiency saves time and reduces the risk associated with handling cash or relying on personal accounts for business and transactions. Well, I would never use a personal account, but apparently it's been done. So, business banking methods. I'm going to go over two of them. There's method one. I call this the Prince Donnell method. One popular method involves splitting business funds into your operation, reserve, tax, market, and innovation accounts. Shout out to Prince Donnell on YouTube for this one. This method offers clear allocations of funds into specific categories, allowing for better tracking and management of financial resources. It promotes financial discipline and risk management by separating funds for emergencies and unexpected expenses. However, it may introduce complexity in managing multiple accounts and potential overhead costs associated with maintaining them. So let's see let's do a new page. So if you open through his method, Prince Donnell, you'll have an operation account. Let's go over that. So you'll have an operation account right here. This first account, this is where all the operations are coming in and out. Expenses are being paid, income is going through, and then you have a few extra accounts over here, and there's a reason you have these 4 other accounts with this method. And I'm going to kind of go over this. So You have your reserve. So you have your reserves, and this is really a savings account, really. This is like where you put 10%, some people say. You can put more, you can put less. 10% of all your profits would go into this account, typically. Just in case in the future someone sues your company for something one did. You never know what could happen to your business in these days and ages. When COVID hit, for example, a lot of businesses went under. You can guess which businesses didn't have reserves in place for emergencies like COVID. Another account you're going to want is your tax account. Of course, to easily pay off your taxes when asked by the IRS. So you'll have a tax one. This is where all the money that would normally go into your taxes, you would calculate how much all your taxes are, and then you would put them all into this one easily to find neat big account for you, the IRS, to access. He also has a market account. So a market account is, of course, just to invest back into your business, make sure that it's getting out there. People are seeing your business. It's bringing in customers, generating profit and revenue. So you always want to have money dedicated to market, dedicated to showing off that business. And, of course, you have an innovation account. An innovation account is for maybe you want to create a new product, or you want to do a survey and hire someone to go out there and do something for you. Innovation, it's also for investing possibly. So it's all about just making investments for your business is what innovation is. It's investing into your business itself. So this is how you take all of your revenue and then you would split it up between each of these. So some of it in the reserves, taxes, then it would go into your marketing, then it would go into your innovation, and then maybe later down the line, you would want to invest in stocks and stuff. You can do that. Businesses can invest in stocks. So you'd open like a stock account specifically for investing in the stock market. And then after you're done all of that, I talked about how you could pay yourself. Then at the end of that, whatever is left over could go into your paycheck to pay yourself. This is why it's really important to consider your business first. Because if you pay yourself a lot of money and you don't have none of the money to pay these taxes, to market your business, to create new things in your business is going to go under pretty fast. So that's just an example of why business banking methods are pretty important. The next method is called the profit first method. This alternative method includes categorizing funds in a profit account, an owner's compensation account, a tax account, and an operating expenses account. So I'll go over this one right here too. So first you would have profit first. It's the name of the method. You'd have all your money go into profits. So this one account is where all your money that you're generating is going into after everything is done. Then you have the owner's compensation. This is how much you're paying yourself. So of course, it's all about paying yourself first. So owner's compensation. Then after that, you'd have your tax account, of course. Make sure you pay off the taxes. Every business should have a tax account where all the taxes are calculated so that the IRS is happy and doesn't come and take down your company. Even the Joker wouldn't mess with the IRS. Let's see. Tax account, operating expenses. And yeah, of course, the last account, you'd have operating expenses. This is where you'd pay off everything that keeps the company sustained. And then whenever you're done putting all that money left into all these accounts, whatever's left over is your profit. This method is to encourage you to really think about how you want to spend your money. So really this one, I think, is like a more advanced version of this one, in my opinion. But maybe there's more to it. I need to read more into that book. Now, funding and financing options. Securing funding is often a crucial step in launching a business. Right here, we'll explore various funding options available to entrepreneurs, including bootstrapping, loans, grants, and investors. You'll learn about key factors to consider when choosing the right funding source and gaining insights into preparing a compelling pitch to attract potential investors. So, what is bootstrapping? It refers to funding your business using personal savings, credit cards, or revenue generated by the business itself. But business bootstrapping allows you to maintain full control and ownership of your business, but may limit your initial resources and growth potential. It can be a viable option for small-scale or early-stage businesses that require minimal upfront investment. Your personal savings, credit cards, or revenue. Yep. So this is an owner's equity. I took my personal savings. I put like 500 into my business, and I used that to pay all the upfront costs. And then what I have left over for my personal savings is cash in my account. It's owner's equity is what they call that. If it's a corporation, it's stockholders' equity. It's where the stock market, everyone that buys stocks, puts it into the business. So that's bootstrapping. Then there's loans. Business loans from banks, credit unions, or online lenders are a popular funding option. Loans provide a lump sum of money that you repay over time with interest. To secure a loan, you'll typically need a strong credit history, a well-prepared business plan, and collateral or a personal guarantee. A personal guarantee is where you sign your own credit score. You use your own credit score as part of it's typically the first loan you make for your business. You're basically putting your own credit score at risk to ensure the business funds are secured and given to the business. Loans offer flexibility in terms of funding amount and repayment terms, but come with the responsibility of regular loan repayments. Note, avoid this option unless you absolutely know what you are doing and are confident in your abilities as an entrepreneur and can calculate financial projections. You make sure you pay off these loans. Otherwise, you're going to lose that business, and all that time and effort is going to be gone. Now, grants, on the other hand, are non-repayable funds awarded by government agencies, foundations, or organizations to support specific industries or initiatives. They can be an attractive funding option as they don't require repayment. However, grants often come with specific eligibility criteria, strict guidelines, and a competitive application process. Researching and applying for grants relevant to your business sector can potentially provide a significant financial boost. So when you're going to get a loan, grants there's also investors. Seeking investment from venture capitalists, VCs, angel investors, which are basically people just giving you a large sum of money, or crowdfunding platforms can provide a substantial injection of capital into your business. Mouth dry. Investors typically provide funding in exchange for equity or a share of future profits. Pitching to investors requires a well-prepared business plan, a compelling value proposition, I went over that before, and a clear growth strategy. Working with investors brings additional considerations such as shared decision-making and potential dilution of ownership. Preparing a compelling pitch is essential when seeking funding from investors. Your pitch should clearly articulate your business idea, your market opportunity, competitive advantage, financial projections, and growth plan. Highlighting your unique value proposition, demonstrating market demand, and showcasing a strong team can help attract potential investors and secure the funding you need. So say you're looking for these investors and these grants. You want to network and build relationships while you're at it. When considering funding options, it's crucial to elevate factors such as the amount of funding required, the cost of capital, repayment terms, investors' expectations, and the impact on your business's ownership and control. Each funding source has its own set of advantages, risk, and requirements, so it's important to choose the option that aligns with your business goals and financial needs. Remember that securing funding is not about obtaining money, but also building relationships with investors or lenders who believe in your business. Be prepared to answer questions, negotiate terms, and demonstrate your commitment to the success of your venture. By exploring different funding options, understanding their pros and cons, and tailoring your approach to meet the requirements of each source, you can increase your chances of securing the necessary funds to launch and grow your business. Oh, wow, I'm already near the end. So this is an announcement. This webinar is something I called an MVP, a minimum viable product. If you found my information helpful, I will be offering free consultation a week from today. So today is the 26th. I should have probably wrote this on there. So on the 2nd of June, I'm going to be basically putting an online thing. I'm going to be scheduling business interviews through my website. I will not be asking for money because I don't believe I should be charging first unless I'm more comfortable with my business consultation advice. I just want your honest feedback and a review of the consultation. If I meet with success, I will be open to a full coaching service operation. Okay. Q&A sessions. Let me see. Anyone else here in the live chat? I don't know. this is a Q&A session usually, so I would have people who want to ask me questions about entrepreneurship or business creation. Don't see anyone here, so I'm probably just going to close it off. Let me see. So, end of the learning journey. Thanks for all joining me today. Let's see. Hope you found this webinar ideal to launch. Information. Let's see. This is my website, financialfamilyvalues.com. If you want to engage with me, I am active on Twitter at TimC413. See, do I have anything else on this? Oh yeah, this Google slide I'll be putting online on my website. This is a resource that I'm going to make just available for all my subscribers, just to use this if they ever want to engage and take on the entrepreneurial life. All this information they can find online will be available to them. All right, I think I'm going to end the stream here. Thank you for listening. I hope you all have a wonderful day.